2016 Fremont Corn Expo, held this weekend, sponsored in part by the Nebraska Corn Board, featured discussions on multi-hybrid planting, phosphorus management, and ag finances. The USDA expects 2016's net farm income mark of $66.9 billion will be 17% below 2015 and the lowest since 2009. Purdue ag economist Brent Gloy, who farms in southwest Nebraska, described his economic outlook for U.S. agriculture at the event and talked with us after his presentation.
The big thing I think that's gotten us to where we're at is kind of sown in the boom that we went through, and that boom created a lot of profitability, and at the same time what it did is it triggered a lot of investment, and that investment consists of improving our factory here in the United States, to use the term loosely, but we invest in a lot of drainage and irrigation and other things to make our production system in the United States even more efficient. And then we also added some acreage into production in the United States, primarily coming out of the CRP program. But the biggest changes really were from South America, where they added tremendous amount of cropland. South America alone had 86 million acres from roughly 2004 to 2014, and that is a huge amount, roughly about how many acres of corn or soybeans we grow in the United States. So kind of try to wrap your head around that. It's a little bit hard to comprehend, but they did it. So
you said today that you think people need to be prepared for this type of environment for the next 3 to 5 years, and that may be a little more long-term than people were originally thinking.
Yeah, I think so, because those acres are not going to leave production anytime soon. So we've got all this expanded production capacity we've got to deal with. So unless we have weather problems somewhere along the way, which we very well could have, but those are really only going to be short-term deals. We've still got that great big factory, and it's waiting for demand to kind of catch up with it. And eventually it will. Demand's going to grow with income and population and other things, but we've got a lot of capacity, and until we have some production hiccups, we're just going to have to deal with it for a while.
How controllable are costs right now for the producer?
Well, I often break it into variable costs and fixed costs, and the variable costs are pretty competitively determined in the marketplace, and so we've seen fertilizer prices fall quite a bit, over the last couple of years, which has been a real relief, I think, to the higher costs. But then the other ones are more your fixed costs, and those are things like equipment and land costs. And what we're starting to see now are land costs, cash rents, and land values starting to come down a little bit. And I'm not for, I'd love to see land values keep going up because it means we have really profitable agriculture. But where we're at now, they just need to come down a little bit, and rents in particular need to start working their way down. And I think we're seeing evidence that that's happening. On the equipment side, that's a much harder thing to fix. I mean, farmers have responded by just cutting their capital investment, which is a reasonable thing to do. But over time, it takes longer to kind of restructure your operation, make it more efficient. It's not something you can fix overnight.
Let's talk about how the U.S. is getting rid of some of that supply, and it's through trade. What impact does a strong dollar have on ag trade?
Well, trade is really important to American agriculture. About 25% of our products are exported every year, so it's really a key pillar of agricultural demand for us. So we need to follow it closely, and with the dollar strengthening, that's put some headwinds on trade, ag trade. But we also have to keep in mind it's not necessarily the dollar index that is reported in the media all the time. We have to look at who we're trading with. And when you look at those countries that we trade with the most in the ag space, the U.S. dollar hasn't strengthened quite as much as it has relative to other currencies. The only caveat to that is that some of our competitors for those same markets, their currencies have weakened quite a bit. So that's a headwind too. But overall, it's not quite as bad as the general U.S. dollar index looks, but it's still a headwind for us.
One of the other areas across the world that you mentioned today was Europe, and you said that people need to pay attention to this economic situation that's going on there. Why?
Well, global economic growth is going to help agriculture, and it drives all kinds of things, from interest rates to inflation to other things. And the European economy is still just kind of stuck in neutral, and I think it's going to stay that way for a while because they just don't seem to be able to fix some of their fundamental economic problems. And then they've got immigration issues and all kinds of other things that are challenging them. So it's important because it's a huge economy. We often think of ourselves as really important to customer of China, but the EU is usually a bigger customer of China, and of course they're an important customer of ours. So want to keep an eye on it. It would be nice to see them get things rolling a little bit, but it's going to be tough.
We'll close with this. What things can producers be doing now to help better position themselves for success?
Well, I think, in the long run in agriculture, and for most people in production agriculture, getting to a low cost of production is the best strategy they can follow. So it's doing things to make sure you're buying those variable inputs right, but which I think most farmers are already doing, but it's getting that fixed cost structure down, bringing it down, working on it, and thinking about what their plan is for the next 3 to 5 years. Where are the investments that are going to have the biggest impact for their operation going forward? What are they? And really trying to push the pencil and understand that, as well as get to know your cost of production, so when you have the chance to market grain at a profit, you feel comfortable doing that. If you don't know where your costs are really at, it's pretty hard to make that decision or talk yourself out of doing it. If you know the numbers, I think it's a little bit easier to do it.